Okay, we're going to go ahead and get started this morning. Before we get started, today is Tuesday, September 27th, and I want to make sure that you are reading the disclaimer. This trading room is provided for information and educational purposes only and should not be construed as investment advice. Future stocks, binary options, and spot currency trading all have large potential rewards but also large potential risk. You should never trade with money that you cannot afford to lose. Everybody understand that? Okay. Now, what we're going to do first is start off with the Forex market. And you can see I just have a 15-minute chart on each of these markets. The one thing that I would instantly identify with is that the euro is at a pivot line. I do think it may go up from this pivot line, and I believe that because the stochastics is actually below the 20 mark. So I do think that this will pull back some. You can see that we have a white price bar here. Now this was a great entry into this downtrend. And let's see, where's my little arrow? Here it is. Now the white bar actually identifies the fact that you are close enough to the ATR to take a trade. In addition to that, price is at a pivot line, and it's also at this blue moving average value. So you have a moving average in that area, you have a pivot line, and you have an ATR. I would anticipate a downward movement off of that. Then when you look down at the volume, you can see that the volume on the buying side was decreasing. Now, I know that this is volume on the buying side simply because we have blue volume bars. If it was red volume bars, I would know that we have lows. The price action is colored into the volume indicator. Does everybody understand that? And that is one I actually wrote about this morning on the binaryoptions.nadex site because I knew that it was going down from over here, and then it pulled back and retested again over here and went down off of it. I mean, it was a nice trade. The other one right now, you see it on the British pound yen. You see that it's retracing back to the pivot line. Here's the congestion dots, okay? And you have two moving averages above this value. What else do you have that says, hey, this market may go down? The stochastics is above 80, okay? This is telling me that it's overbought. Right now, we're getting divergence on the highs, and we have resistance with the blue moving average, a pivot line, a congestion dot, another moving average, and then the 200 period moving average. That's a lot right there that it would have to go through with no buyers coming into the market, okay? Now this bar just started building, but given all of the other conditions, I would say that this is going to come down off of that congestion dot, okay? And these two charts stand out at me because we are at areas that may resist price or might support price, okay? The British pound US dollar is in the middle of nowhere, okay? USD JPY in the middle of nowhere. It's probably going to come down to 100.006, okay? But there's no trade entry there. The USD CAD is probably going to come up and test 3267, okay? But again, you don't have an entry on there, okay? So these are the things that I look at when I'm looking to see, okay, which market should I trade? Well, which market is at an area that may support or resist price? And it doesn't matter whether you're doing it with a 15-minute or whether you're doing it with a 60-minute. The concept works on any chart you pull up, okay? On the euro yen, okay? Right now you are at a pivot line that may support price. Do you have volume divergence? Well, price was making new lows and volume was increasing. Do I think that it could retrace? Yes, it could retrace because the stochastics is below 20. Is that a trade for me? No, because there's nothing else on this chart that supports this entry. Do y'all understand that? If you're going to trade off of just one indicator, then just have one indicator on your chart. I like to see a confluence between my indicators that says, hey, this market is going to go up or this market is going to go down. Does everybody understand that? It's not just one indication, it's several indications telling you exactly the same thing. Any questions on that in the room? Over here on the US CAD, okay, you're probably going to go up to 32.67, okay? Is the price bar white? No. That tells me I'm not close enough to take a trade because I would need to come under this ATR as a stop, okay? I tell you what, let's look at the US CAD, Dave, and I'll show you. Now, I'm going to do this in a demo account. I do not trade my live account in this room. Not today, not tomorrow, not ever. And let's see. Yeah, it was hidden divergence on the euro US dollar Wepper. Let me get my chart up, Dave, and I can show it to you. I have it opened on another window. I'm trying to pop it out so I can just bring it over here. I don't know whether it's going to work this morning. Yeah. Give me just a minute. Let me see if I can get this working right. I'll just have to bring it over like this. And right now price is at 32.28. I would take the 8 to 10 a.m. Now, you could go in at the money, which is 32.33, okay? I'm going to go just one strike price out at 32.43. because I believe that this is going to go up. Do you understand that, David? And all I did was go out one strike price. Now, this is not my favorite currency to trade unless it's during the U.S. hours. I prefer the ones that have the lower strike width of 4 pips. For example, the euro dollar, the USD JPY. The USD JPY is probably my favorite. The second favorite is the euro dollar, and my third favorite is the Aussie dollar. Okay? So all I did, this is the at the money, which is 32.33. I went to 32.43. This is a 10 pip strike width. Okay. On the others, they have very much lower. They're like 4 pips. Okay. You can see here you've made a double bottom. Anytime you see the red and the blue together, that just tells you you have more strike prices and to click on them, okay? Euro yen, no, the euro dollar. The USD JPY is my all-time favorite. It really is because, you know, even at 1 o'clock in the afternoon, the USD JPY can move 4 pips. And your strike width, Wepper, is 4 pips, okay? 6 o'clock at night, you can get a 4 pip move off the USD JPY. It is truly one of the 24-hour markets. The euro yen actually has 10, I think it's 10 pips between the strikes, which is why I don't like it as much. Let me increase this just a little bit. We'll come over here and at the euro yen, if you look between the strikes, do you see how they're 10 pips, Wepper? I prefer the ones that have 4 pips, which is why the USD JPY is one of my favorites. The euro, the Aussie is basically during Asia. I like trading the Aussie, but it's still a slow market. Now, to set a profit target on this, let's see, our entry price was at 42, okay? To make 100% on this, we need to set a profit target at 85. So I'm just going to go in and I'm going to put in an $85 target and place the order, okay? That way, if I get busy and it goes up, then it will take me out on the profit target, okay? Everybody understand that? Now, if you do it over here, we bought this. We know that because it says plus 10. So if I click on the sell button, I've got this defaulted to 10, but sometimes it'll come up with just one contract, okay? And then you're stuck in the position with extra contracts. So make sure you're always clicking on the plus 10 or negative 10 or whatever number of contracts you're trading. Does everybody understand that? Now this does have enough room because if you look at this, we're at 32.43. The pivot line is at 32.67. That's 2 strike prices in our favor, okay? So if I scroll down, I'm anticipating it to get at least up to this number. Do y'all understand that? Now, I'm going to move that off for a moment because there was one. Oh, it's this one, the British pound. Do you see how close this was? That's one strike price, guys. One strike price. There's not enough room there for you to really make profits on your binary because it's only one strike, because it's a 10 pip strike. And that's what you're looking at. And I do it automatically. You know, I can look at this and say, okay, there's enough room here. I can capture profits. Okay. But if it's too close, like it is right now, you're not even going to go out one strike price. Okay. That makes a difference in whether you're able to capture profits or not. If I had a expiration like at 9 o'clock, I would have went in this at 9 o'clock and probably would have already captured all of my profit. What is the difference? The time decay. If I had went in on a 9 o'clock, time decay would have worked in my favor. In this case, I've got 2 hours until this expiration. For this to get up at 85, it's going to be hard because time decay is not working in my favor. That's also known as the theta. And in this case, I'm actually watching the 3267. You could actually put a line here. It's going to be about here. Might be a little bit above that. You want to watch that area because that's where I know I have a line of resistance. In other words, it may get there and then start to come down. How many of you think I would not take my profit? I will take it so fast it will make your head spin. Your job as a trader is to take your profit. You're not always going to get what you want. Yeah, but you made that low, Wepper, and when you made this low, the buyer stepped in and controlled that bar. It's probably going to be after this bar that it makes that magenta peak. That's what my guess would be, Wepper. Would I sell to open above thinking it would not reach it? No, generally I would not, David, because that's where your highest risk is going to be. See, if I sold this, I'm paying $73 right now. I'm not paying that kind of risk on a trade. I may close this one because I don't like what it's doing. I wish it would stay open. There we go. See, right now I don't like this bar that's forming. So I'm just going to click on my profit target and I'm going to go ahead and exit the position. I don't like that bar that's forming, okay? This is typical of a reversal bar, okay? We're close enough. I'm just going to go ahead and exit. But what I sell, no, you're going to incur a lot of risk if you actually sell right there. Do you understand that, David? Well, this is what you're going to do. And I'm in demo, so I don't really care. This is a little bit slow because of the webinar software. Okay, this is where the line is, right? If we sell that, look at your risk. You're risking 667 to make 332, okay? And that's max. No, I wouldn't do that. You have to have an accuracy rate of about 75 to 80% to do that. And I'm not doing that. So that is what I would call a high risk trade. And it has no potential of making even 1-to-1 risk to reward ratio. Okay. 1-to-1 just means you're trying to get at least 100%. 150 is even better. And sometimes I'll go out to strike prices. But again, you would not have made enough to cover your trade if you had went out to strike prices, because there was only 2 strike prices until it got to the red line. Now, the way that you could trade that is, come on. Okay, I think that this is going to come down from this area, right? And I've got an hour and 35 minutes left. In that case, I would sell beneath where price is. Okay, price is at 32.56. I'm at 32.43. Okay, in this case, I'm going to sell. The total risk is $37 per contract. I might have to change it. Yep, I'm going to have to change it. In this case, I'm going to do about 39 or 40. So now that's the way that you would sell it. Okay. So now if it comes back down to 43, then you would still make money. Do you understand that, David? But you're not risking a lot of money for that trade. And you still have 5 minutes on this bar. As it stands right now, it's forming a reversal bar. You've got divergence on the stochastics, okay? Will it come down? Yeah, it should. Will it get here? I don't know. We'll have to wait and see. In Wepper, this is where I would be anticipating the magenta peak. Again, you're at resistance, okay? There's potential for volume divergence. Looks like you're going to get divergence on the stochastics. This would be the time to anticipate that magenta peak. And to come in, it's going to have to go to about 32.48. Now, if we do get, and what he's talking about, for those of you that are not familiar with it, is the ADX. If it forms a dot and looks like this, which is a peak, that tells us it will come back down and try to test this ATR. Does everybody understand that? And it's going to have to move about 12 pips at the moment. Can the USD Canadian move 12 pips? Yes, because we have a market opening before expiration. Okay? So if we're right about the direction and it does come down, it is feasible for a 10 pip move. Would I do this at 2 o'clock in the afternoon? No. Currencies get slower in the afternoon, which is why I limit myself to the USD, JPY, and Euro dollar. What I would really like to see is that this closes on the low, preferably below 32.53. This particular bar expires in about 2 minutes, so we'll wait and see what it does. We have a couple of very minor reports at 9 o'clock this morning. We have the S&P Composite 20 HPI year over year. We also have the flash services at PMI at 9:45. There's also the CB Consumer Confidence at 10 o'clock, but I'll be through with the room before 10 o'clock, so. And then we have the FOMC member Fisher speaking also at 11:15 a.m. He's actually speaking why study economics. So that's probably not going to create very much volatility unless he says something completely off the wall. Now this is still a reversal bar, okay? And it normally indicates that this bar should take out the low of this bar. It's not doing a real good job at the moment, but we have to wait and see. Is there a best time frame to start the trade? In my opinion, no. It's more of a trader's personality, David. I like the 15-minute because I'm usually trading a binary option that has less than an hour until expiration. I want 4 bars to go in my direction. That's what it comes down to. I trade the dailies when I'm not going to be around during the day because I have all day for that trade to work in my favor. But if I'm sitting here watching the market like I am right now, then it's going to be probably less than an hour that I'm in a trade. You know, if you want to trade, for example, a 60-minute time frame, then you need at least 240 minutes for that trade to work in your favor. If you want to trade a daily, you need 4 days for that trade to work in your favor, which means you want to go out to a weekly. I keep losing my strike. I'm watching the volume over here, just in case y'all were curious, because the volume on the last bar was increasing, but the volume on this bar is decreasing. Again, it's just divergence in the buyers. It's telling you that you have less buyers on this current bar when compared to the previous bar. Ideally, what you would want to do, there's a little hash mark. Does everybody see that on the volume indicator? Ideally, what you want to do is see that go to below zero. That tells you that sellers have truly stepped into that market if the bar closes on the low. It's not quite there yet. It's got another almost 5 minutes. That little bitty mark right there is what I'm watching. That and the fact that right now it's decreasing. That could change before the end of the bar. I don't know. We're watching to see what it does. If it stays up, David, well, it depends on whether the actual volume bar itself increases or decreases. If it increases, I would suggest you exit this trade. But again, we entered simply because, oh, there was a red line. That was our entry criteria, which the binaries are more forgiving for that. On the Forex side, not as forgiving. Okay, now let's see if we can go down. It's tried to test 3263 twice now. That last bar, you did get volume divergence. You didn't get sellers stepping in, but you still got volume divergence. Also getting trend divergence on the stochastics. If you start watching the ADX now, which is this indicator down here, if this low here is violated, it's probably going to give you a magenta peak. That means that price needs to come down, I would say 32.53, and that peak will start appearing. Now, if it does come in, that tells me that price should come back to this little plus sign here, which currently is at 32.21. And the binary has an hour and 13 minutes to get this done. Now, because we're short on this one, and this is a common mistake that most people make on binaries, we're short. We need to go down in price. So in this example, I'm going to put $10 in here as a profit target, because on the shorts, it counts down from 100, okay? And that way I can move this off and we can go and see what the futures are doing this morning. Wrong one. There's futures. Where's futures? There we go. Futures is on the way down to 17,940. Now this one, if you were smart, you were trading it from the 180. Okay. This, and I'm going to expand this out, and it just, the same thing that I've been saying, it doesn't matter what your time frame is, wait for your setup, okay? And in this one, we had a high here to this high, and on the stochastics, this is like my favorite setup, that's hidden divergence. That says that more likely than not, this is going to come down. In addition to that, you also have an ATR and two moving averages there that it could not break through. Okay, so that's a great example of, yeah, it's probably going to come down off of that. Does everybody understand that? And this magenta peak that I keep talking about, you see that on the chart as well. This is your magenta peak. Okay, so you've got hidden divergence here. See if I can do this. You've got hidden divergence. You've got resistance here, and you have a magenta peak, all saying, hey, it's going to come down. Do y'all see that? Does everybody understand that? I mean, you've got multiple indicators that are non-correlated telling you, hey, the market's fixing to come down, okay? Now, in this case, you would have to go out on a daily, okay? That's the only way you could have traded this was on a daily chart. That's it. And that setup, I think, actually came in on the ES as well. Let me check the NASDAQ. It came in on the NASDAQ, came in on the ES, came in on the Dow. You know, every one of them gave you exactly the same signal. Let's see what crude's doing. Crude actually came back and tested the pivot line here. Basically the same setup, just a different time frame. There's your lower highs in price and higher highs in the stochastics, hidden divergence, okay? You have a magenta peak indicating that you would go back to the ATR. It gets to the ATR, cannot break through the pivot line, cannot break through the ATR. It's probably going to come down to here. Unfortunately, there's no 2-hour binaries on crude at 2 o'clock in the morning. That's not hidden divergence, Sashi. That's just volume divergence. Hidden divergence, you have to look for yourself. The magenta peak is what kicks it back to the ATR, Keith. That's the one that says, hey, look at this, you're going back to the ATR. And I do not have the volume divergence for NinjaTrader Market Analyzer. I've thought about doing a divergence off the stochastics, but it's really something you need to look at because you need to know which high to measure from. And that is the big issue with the hidden divergence, Sashi. Now, y'all can see that this is finally coming down to where our trade is at 32.43, okay? Now, we need it to come below 32.43. It's not there yet. But at least it's heading in our direction, okay? That's a good thing. Let's go look at gold. We haven't looked at gold yet. I would think that gold would go up, but I'm going to wait until the market opens before I even attempt that trade. So we'll come back over here and look. Remember, our strike price on this is at 43, which is about here. It has to be equal to 32.43 or less than when you're short. You know, why do I like to enter at the ATR? Because it's the lowest point of risk. And now you may be getting an entry on the euro yen. It's not there yet, but do you see this volume divergence here? So you've got volume divergence. You're at an area that may support price. Okay. And that's when you come over here and you look for a trade on the euro yen. I'd have to go out until 10 o'clock. And you could get this one for about $44 right now, $45. Because this should actually close above this line. There's only 4 minutes left in this. It should actually go above this line. This one I'm a little bit worried about because of the way the bar is forming. Okay, but we still have 1 hour on this particular binary. Okay, I just don't like the way that that bar is forming right now. And if this continues, I would exit that trade. The floor traders pivot, Wepper. Now again, this is one that's in the middle of nowhere. Okay. Yeah, they're called floor trader pivots. It's in TradeStation. It's floor trader pivots. What do I mean by in the middle of nowhere? You're not at an area that's going to resist price. You're not at an area that is going to act as support. You're literally in the middle of nowhere. Okay? Those are the trades that I really do not like to take. But you'll do it, and you'll do it because you missed the trade. If you miss the trade, you miss the trade. Wait. And this has happened a lot lately, only because we've had a lot of market movement overnight. Not as much during the day. In fact, during the day, they usually reverse it on you. And on this one, you don't have anything until it gets down to 17,940. All right, I'm going to take a quick break, and I'll put this one up because we do have one on the euro yen, which is at 42. So I'm just going to put a line on that chart so y'all will know where it's at. It's about there. And I'll make it magenta on both of these. Well, on this one, I'm going to have to make it a really bright green. And on this one, we're short. and I really don't like that that bar closed above 0. The price bar did not confirm it at all because it closed more towards your low than to the high. I just don't like that bar. So, all right, I'm going to go take a break and I'll be right back. Okay, I'm back. Let's go look at the futures. There's the net. Mm-mm. The only thing we have is a 3-minute price at an ATR. Oh, don't trade a 3-minute during these markets. Usually when the higher time frames are dominating, that's when it's harder to find the entries on these lower time frames. You can see on the ES, you were at the ATR on the 180. Also at the ATR on the 1440 earlier. And on the ES, you were at the congestion dot with volume divergence. This just tells me that the higher time frames are dominating right now. And that's usually when you see bigger moves, is when they're dominating. That's why I like trading with the higher time frames. And that pattern pretty much holds. You see it on the 720 Dow. You see it on the 1440 Dow. On the NASDAQ, you see it on the 180. You can see it on the 1440 right at the congestion dot. And this one was probably right when it was at that congestion dot on the 1440. And you had that volume divergence indicating a downward movement. And this is when you're just kind of late to the game here. If you're trying to get into these downtrends, you're really late. You should have already been into it. Let's see what crude is doing at the moment. You can also see right here at the ATR, the only thing you have at an ATR is the ES, and that's on the 720. And this is telling you there's just no entry points right now. I would think the NASDAQ would get at least to 47.95 or 47.93. But again, you're in the middle of nowhere here. We have about 10 minutes before the market opening, so I'm just going to wait and see what the market opening does. Do y'all see how these magenta peaks are coming in on the lower time frames? Now, if they roll into these higher time frames at the U.S. Open, they're going to reverse the market. And we see a lot of that, so be aware of it. And if you're trading these smaller time frames, you don't want to get caught in that. This column on the radar screen is highlighting how many ticks until a magenta peak comes in. You can see this one has 14, this one has 10, 16, 12, 16 on gold. At the minimum, you should wait until that retracement comes in, even if it's going to be down all day long. Wait for the retracement, because then you can take one strike price out and lower your risk. And if you're trading futures, you really want to wait until it gets back to the ATR before you go into the market. Let's see what the Dow's doing. And the market opened. We really want a setup that looks just like that 180, where you come back to the ATR and you have volume divergence and preferably hidden divergence on the stochastics. Right now you're just, as I said, in the middle of nowhere. we want to wait until we get this picture over on the 12-minute. That's when we enter. $533 Weber. And I just want to show y'all something on this Euro Yen. This is where you're getting the gamma and the theta both in your direction. In other words, just one simple tick on this is changing the premium dramatically. Do y'all understand that? And you can also see, especially on the US Canadian, this is why I tell you that the binaries are more forgiving, because this went up here to right at 32.82. Okay, we were early on our entry on this. Do y'all see that? But it's more forgiving because you locked in your risk on entry. Okay? That's what I mean by locking in your risk. It's more forgiving. You know, okay, I'm willing to risk 400 for the potential of making more than that. Futures not that forgiving, I'll tell you. Futures in Forex. Do you see how you're getting this little dot over here on the Canadian? Because you're at an ATR. All right, I'm not going to be stupid here, okay? I'm not going to get greedy. I'm just going to go ahead and buy this back now and lock in those profits, because that dot tells me that there is an area that's going to potentially support price. No, we might be able to get more on the yen. Don't know yet. When you get greedy, you'll lose. If this gets up here to that 62 line, I'm out. Yeah, it's corresponding to the ATR. In this one, it's starting to hesitate. I've already made right at 100%, I'm sorry, on this one. I'm out, guys. I mean, that's as simple as it gets to me. Do y'all understand that? My job is to make money. I did that. And that price will pop against you in a heartbeat. All right, do you see how you're getting this little red dot here? And I'm looking at the volume. What time is it? 43. This is where you could go into the indices. But let me check something first. Oh, no. We ain't doing that. When does this one end? I don't like what the 45 minutes doing, guys. Okay, this ends at 9:48, which is another 5 minutes. But what I'm looking at is over here on the 45 minute. Do you see this little blue hash mark here? That's saying that buyers are coming into this bar. And I want to go short? I don't think so. You don't want the buyers to be in control of the bar that you're going short on. That would be a real no-no. That's when I'll sit back and wait. We'll see what it does. And that ended above zero. It told me that buyers stepped in on that bar. I want to go short, but buyers stepped in. Would that make sense at all? No. Do y'all understand that? you're going short, but buyers stepped in on that bar. Now, I ain't touching that. We did get a magenta peak on crude, so let's go look at it. We need to come back to this ATR and test it, and it would need to be on diverging volume. Then you could actually take a long position on crude. The problem with crude and binaries, the binaries are offered every 20 cents on crude. So price is currently trading at 44.70. So that would be 44.90, 45.10. It's probably might get to 45.33. So you might not have enough room to actually take profits if you do a long on crude. You don't have diverging volume right now either, so you have to wait. I'm still waiting on the crude chart to come up. Let's try it again. And this is GoToMeeting really slows down the charting. So you could go in here at 44.80. It's going to cost you about 50 bucks. Okay. But if you go up to 45, it would be 26. Now, I don't think that there is enough room here for profits, but we're going to find out. Okay, let me refresh this because it's So on this one, I went out until 11 o'clock. Remember, we need at least 4 bars in our direction, okay? We'll have to wait and see on this one. I don't really like the setup. I don't think there's enough room for profits. We do have an hour and 15 minutes though. But it's a great example of actually looking and seeing if there is enough room for profits before you enter the trade. You need 4 bars to move in your direction, basically, Wepper. When you go out on a binary, you need 4 bars, okay? I'm trading a 12-minute chart, basically. So I need 4 12-minute bars in order to give me a profit on crude. That would be 48 minutes, which means I need a full 1 hour, okay? Do you understand that now, Wepper? If I'm trading a 60-minute chart, I need 240 minutes on my binary. If I'm trading a daily, I need to go out on a weekly, and I need to be trading it on Monday or Tuesday. Tuesday at the latest. And basically on crude, we need it to come to this blue line on the 3-minute chart by 11 o'clock this morning. I needed some way to measure how much time I need for a trade. Okay. Yeah, I always need at least 4 bars, whatever time frame I'm trading. And this is why you don't see me trade crude a lot, because there has to be a lot of room on these retracements to get your profit target. And right now you're going to have a lot of things in the way. You got the 200 period moving average on the 45-minute. You got the ATR on the 12-minute. But it's a great example of showing y'all what I'm talking about. Do you see how this green line is offering support? You can also see that the gamma on this one is really high, because the difference between the 45 and the 44.80 is about $20. So that means, if it gets here, automatically you're going to have profit. It doesn't take a lot to change this profit on here, just because your gamma is higher, because you don't have a lot of strike prices that are actually being traded. They always offer the same number of strikes, but you'll find that they're not always being traded. And I like the high gamma trades. I just don't like them on gold, and I don't like them on crude. Now you see what I'm talking about. See how quickly we went in profit on this? That's your gamma, because it's not a lot of strike prices that are being actively traded. You see how you got that red dot over here on the 12-minute, Wepper? that tells me you just had a binary signal on that. That's why that red dot appeared. I'm the only one that has the red dot though. What we want is for it to go through the ATR on the 12-minute chart. Preferably straight up to the 200 period moving average on crude. Hidden divergence, no. You've had trend divergence on the 12-minute. But it's not hidden divergence. Hidden divergence is if it had made a lower low, no, a higher low in price and a lower low on the stochastics. It's actually the opposite. It's trend divergence. You made a lower low but a higher low in the stochastics. The hidden divergence on crude was actually back here, and it came in about 6 o'clock this morning. You made lower highs but higher highs in the stochastics. And now if you measured the lows, and I mean I generally just measure the immediate low, then you made a higher low in the stochastics. This told you that it was probably going to go back. I was watching this volume, and this is why I said don't go short off of that 12-minute crude chart, because you were going against the buyers, okay? And that volume indicator is the only one that shows that. Regular volume indicators will not show that. And you better believe I do not want to go short when buyers just took control of the bar. That's financial suicide. That's what that is. And when I'm trading, my charts have lines all over them, because I'm constantly monitoring all of this, and I have to actually clear them all off when I finish, like that. See how it hit this blue moving average here? It's coming back to test the white one now. Now, if the white one holds, it will continue up, but if it doesn't hold, we're in trouble. Does everybody understand that? I want to go see what the Forex did. We took profits on both of these. I think we had another one. I don't remember what it was on though. It's been a nice morning, provided you waited for the trade setup. Yes, I will post the recording later today, Juan. You're welcome. We really need this to go up to this red line at 45.37. In other words, we need the white moving average to actually act as support to push price up. It's not doing too good at it right now. I love hidden divergence. I can trade that all day long. And I mean, we've done 3 trades this morning, and it hasn't been a busy morning at all. I think overall we were risking probably 1,200. and I think we locked in about 1,000 in profits. It's not bad. I wish they offered the 2-hour binaries on the indices 24 hours a day, like they did Forex. It's probably a good thing they don't. Let's see if we can go up off of here. I don't really like trading the 3 minutes right now. The market's just not moving sufficiently for trading a 3-minute chart, in my opinion, of course. I would really like to see this flip to the upside and for this bar to close up. I have to wait and see if it does it or not. If this pattern holds, we should get a move off of this. Depends on whether it holds or not, because you're going lower on the stochastics but higher in price. It's early to be reading that. Just to show you an example, Wepper, I only trade it basically off of the higher time frames. You know, the 180 was an excellent example today. On all of the indices, you had it, every one of them. Shit. Why couldn't I open up the binaries, man? And you could have traded it off a daily, but I know the U.S. market opening would probably take it down. So You have to exit early on those before the U.S. opening because they'll screw up a good trade. That's what they're known for. If you were in on the future side, you could just trail your stop down. And in this case, all three of the higher time frames have great setups on them. The 1440, the 720, the 180. And again, this is where you're measuring whether this divergence is going to work or not. Okay, you're still making higher lows right now, and you're still making lower lows on the stochastics. But do y'all see what I was talking about where you had this blue line right at our strike price? That's what messes up a good trade. I say things that mess up a good trade. Yeah, it does look like you're going to get another hidden divergence there. It's come back to test that low. It's not breaking below it, and your stochastics is going below the 20 line. The problem is now, will it go high enough for us to make a profit? And that's really going to be your issue here. You got 45 minutes in that binary. And that's, to me, is about like the weatherman. And do you see what the 45 minutes doing now, Wepper? Do you see how the sellers are coming in that market on the volume indicator? The dash mark just went below zero. Now, you're reading that a little bit early, okay? But I wouldn't want to be in this trade if that 45-minute holds up. I think it has another 15 minutes before it ends. Yeah. So, I mean, it could flip back up. It could flip back down. I'm reading this early. You really want to read it at the end of the bar. This is where you're going long and sellers just stepped in. Duh. Don't do that. And see, here's your problem, okay? Can this move from 44.70 back up to 45 before expiration? I don't know. It's like asking me, would it rain today? Maybe. about the same equivalent. And this is why I tell you, make sure there's enough room. You want your binary to be able to go 2 strike prices in your favor, okay? And this is why I wanted to show y'all, okay, we went to 45, but it needed to be able to move to at least 45.40. Well, you had $45 right there in the middle of your good trade. If that hadn't have been there, it probably would have went up here. We would have had our profit target. And we don't want to take anything less, so we didn't take profit when it was offered. Well, you're going to say what happens. Maybe. We got 45 minutes left, so this bar needs to really start working in our direction. And I don't think it's going to work in our direction, actually. So you still made a higher low in price, lower low on the stochastics. Should that push it up? Yeah, on the 3-minute chart. Don't expect miracles there, okay? Just saying. Know your time frames. You want a great example? Look at the 180 Dow chart. That hidden divergence was a very, very powerful hidden divergence on the Dow. A 3-minute could be a 10-cent move, which is why I don't trade it on a 3-minute normally. And you are going against your 45-minute right now, which is not a good idea either, because the 45-minute bar did finish, and it did tell you and identify that sellers stepped in. As this price went up, it made a high at the 200 period moving average. The high was at 45.02. The moving average was 45.04. Sellers stepped in and they took control. That's what that bar is telling you. Okay? You see the little hash mark? It's below 0. There's your problem. You're going long when sellers are stepping in to take the market down. Does that make sense? And that's what this bar is telling you. And you're also getting less buyers on that bar. It doesn't finish for another 10 minutes. but I don't like that pattern. This is a momentum shift to the downside, okay? In other words, on this bar, you see that the little hash mark is above 0. They came in, they took profit, and now they're going back down with it. And you're long. Okay. Does everybody understand that concept? Yeah. Or better yet, take your profit at 45 because that was the resistance area. Instead of saying, I want more, 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 just say, okay, I'm going to take the profit because I've got an area of resistance there, and it might not be able to clear it because all of your higher time frames are saying no. That's called trade management. You have entry and then you have trade management, two different skill sets. You see how the Dow went up. Remember, I refrained from going into that downtrend. The reason I refrained from going into that downtrend was because I figured they would take the market up. This is what the U.S. traders have been doing all summer. That's why I didn't want to get in caught in the middle of that. But it was going down, sure, until that bar came in and buyers came in on the low and took control. Not a good place for an entry. I think they did it on the NASDAQ. Again, buyers stepped in on this bar. On the ES, they actually did not control that bar at all. And this is one of those bars, it looks like they did, but they did not, because this did not go above 0. Let's go see what gold is doing. Gold made a magenta peak on the 12-minute. That normally indicates, and this is actually the reverse, you had buyers step in here, but then immediately sellers step back in. It's usually a really bad sign. Let's get back and see what little crude is doing. And now not only do you have the moving average at 45, but now you also have an ATR in the way. That's really not good for your trade. Does anybody have any questions? Because I'm just about to tell you that trade's going to be at a full loss. You should have taken profits when they were offered, or when you saw buyers stepping in on that low. That would have been a good place. And right now, you're pretty much at a full loss. You might have, yeah, you can save $2.25. Any questions this morning, guys? We had 3 really great trades. I'm not going to count this trade against me because I told you from get-go you had problems with this trade. So, oh, you too, Whipper. Any questions? Any questions on the indicators? All right. Well, I hope everyone has a wonderful trading day. And I'll be back next Tuesday morning at 8 o'clock as well. You too, Keith.